I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews with Vince Kadar, CEO of Polymath, here to talk about institutional adoption of blockchain, tokenization, real-world assets, the Polymesh Layer 1, and so much more. Vince, welcome to the show, and thank you for taking the time.
Thank you very much, Ashton.
Yeah, real-world assets and tokenization has taken off. I feel like especially since so many corporations are getting involved with Bitcoin, and then they realize the potential that blockchain has over the last year and a half with the ETFs and more companies just realizing this is the future. And I know Polymath has been around since way before then, and you've been innovating and growing with the industry. I would love to hear the latest. To start off with, what is Polymath all working on right now? And then we can dive into all those topics.
Wow, well, that's may take actually longer than longer than this recording to go through everything, but we're definitely very busy working on many parallel tracks. In February, we announced that our intent to go public via reverse takeover of a publicly traded operating business called Analytics Insight. Um, the goal was to be listed by this point in time, but we stopped actually the train on the track, in order to acquire actually another asset. And that another asset is we acquired our layer one chain, Polymesh. So if anybody remembers the story about Polymath, we are a layer one chain. We created a layer one chain, Polymesh. We separated it out of Polymath. It was a separate organization. It operated independently or has operated independently since October of 2021. And a few weeks ago, we announced our intent to acquire Polymath back into Polymath as a subsidiary that's located in Cayman Islands. And that transaction will close in sometime next week, probably on Friday of next week. But really, what that means is greater alignment between Polymath and Polymesh now, and a real focus on delivering on the RWA thesis and I guess, the intent of why we create, like, why Polymath is even around. Um, Back in 2018, the focus was all about the tokenization of real world assets. We brought together the working group of 25 experts and companies to define ERC 1400. We then created that layer one chain because we realized that the market needed a fit for purpose chain specifically for the tokenization of real world assets. That smart contracts were, again, a not an overkill, but it was just a band-aid on a solution, and that's why we built Polymesh. We then later carved it out because, well, that's what blockchain companies do. They create their not-for-profit. We stay at the for-profit. They build the ecosystem. We build actually the business and commercial model actually for for the marketplace. Um, Now that we're coming together, as I said, we're still operating independently, but with an aligned objective, right? And so Polymesh Labs will continue on its role as being an ecosystem play. But like I said, there's just greater alignment with us that we can create deal flow with each other. We still, like, Polymath will specialize in its field, but it will work with its ecosystem partners to make sure that we're just delivering actually on the overall objective, which is to get total value locked of assets on our chain.
Yeah, I'd love to dive into the chain part a little bit more. But first, I want to hone in more on the tokenization and the interest from all these different companies that, they hear other companies are tokenizing, they want to do it too. They don't really know where to start. Could
Yeah.
you walk me through, if a company came to you and said, I want to tokenize our stock or something in our company, how does that work?
Yeah, yeah, and again, we have a lot of calls every day as far as people that want to tokenize something because they hear the buzz, they see the excitement, and now it's like, okay, let's call Polymath because they're going to help us. So we
Uh-huh.
can help them from a technology point of view, right? We're not a full service company where we have a broker dealer, but we've got a network of broker dealers that we can put them onto We've got a network of legal companies actually that we can refer them
Mm,
to as well. So you're not circumventing anything from a legal point of view. That's the
mhm,
most important
mhm,
point. You still got to actually have your offering underwritten by a securities lawyer because what ultimately you're doing is you're creating a security or you're issuing a
mhm,
security. And it even gets to the point where when people see the use case of real estate and tokenizing real estate,
mhm,
a lot of real estate developers, real estate owners, they want to do that. Okay, so but they what they don't realize is that you're converting, if you're a broker of record
mhm,
for selling real estate, you're not that same broker that's selling a security now. They
mhm,
have a different license, different
mhm,
jurisdiction, and that confusion exists. And
mhm,
you know, we've dealt with that time and time again that you are transferring something from this type of asset to that type of asset.
mhm,
Uh, so how does it work? Well, there's engagement with us. We can set up a platform for them. Like if you're let's say, Ashton, you wanted to tokenize your cap table for Block West
mhm,
Capital, right?
mhm,
You could do that, right? You're the owner. You could totally tokenize your cap table. You can license the technology from us. You can operate it yourself because you are the owner. You can
mhm,
even issue the security token itself because you're also the owner. You don't need a broker dealer actually to
mhm,
raise your seed round, your Series A. You know, maybe actually after you do it a couple of times, then maybe, again, get a lawyer engaged or maybe get a broker dealer engaged. But typically, again, like startups, they do this themselves. They do it through venture funding and you can model your cap table on a Polymath platform, even through your venture funding round and open
mhm,
it up.
mhm,
Um, so you would where would you start and where would you end? At some point in time, you got to get to a lawyer. They got to put together your offering. You've got to price out the offering. You got to describe actually, myself as an investor, if I'm going to invest in your particular offering, well, why do I want to invest? Right?
mhm,
Is there yield? Do I have rights? Right? All these things that I'm saying also are programmable into the security token, right? The yield, the rights, the jurisdiction, the trading, the lockup value. Like there's other aspects that can be incorporated into that security token as well.
mhm,
But and where they end ultimately is hopefully actually on our chain and hopefully
mhm,
in a trading venue, either a DEX or a centralized exchange that allows it to be tradable.
mhm. No, some great insights, Vince, and that fact that you laid out in the beginning about, this is not like a shortcut to, just doing it the easy way. You still have to do, it's a security as a security, whether it's on the chain or off the chain. You still have to do everything the same. And you mentioned
Correct.
there at the end, one of the advantages is you can bake that stuff into the smart contract to make it more efficient.
Correct.
Can you talk about other advantages for these companies that they've heard about it, they realize, okay, we're not taking shortcuts, we still have to do everything on the right side of the law, but we're including the tokenization, okay, programmability. Are there other major advantages to tokenizing versus just traditional security offering?
Um, definitely it's a transparency. Well, it's making liquid what's illiquid today,
Mm-hmm.
because a lot of products that are now being tokenized, and what we see, it's not like we've seen actually the other players that they're tokenizing a money market fund. Well, a money market fund is already liquid. They're just taking a product that we all understand and representing it actually in a digital format. What we're Our engagement is with organizations that want to do things differently, tokenizing a revenue stream as an example,
Mm-hmm.
right? And providing because again, like you could tokenize a future revenue stream on something that you're delivering. You could tokenize let's say a distillery that's producing gin and vodka today, but they want to start aging whiskey, right? So tokenize the barrels, offer that up as an investment product. It's that creativity that we see as our level of engagement, and it's the interesting use cases that we'd like to work with. I think where it comes down, I think where the start and the stop is that there's the hey, I'd like to do this. What can I do? And the
Mm-hmm.
answer that we tell most people, you could do virtually anything. You could
Mm-hmm.
tokenize anything, right? It's just a matter of what is a lawyer willing to underwrite actually as part of your particular offering, and does it make sense? And then can you deliver on that? Because the last thing anybody wants to see in this new space of tokenization is that people are actually just creating, false products and they're issuing security tokens that is tied to, like melting icebergs.
Definitely. No, that's a good example with the whiskey. There's probably tons and tons of companies that have products or inventory of some kind where the process could be so much more efficient if it was tokenized. The inventory sitting on the shelf for years, whether it's aging or minerals in the mine that have to go through the process. If you could tokenize that at an earlier state than the final product, I feel like that would make more companies efficient through this kind of tokenization.
Right. And when we like the whole reason for doing this is that the goal is that we collective we as far as all the actors that are building this new digital footprint, we create an environment where the markets are, running more efficiently, more transparently, optimized as well.
Mm-hmm.
We're basically, I'd say, rebuilding or reimagining the capital markets operating system,
Mm-hmm.
right? And when you think about that, well, we're a disruptor, right? And other companies like us are disruptors. Like Napster was a disruptor for the music industry, and Uber was a disruptor for the taxi industry, and Airbnb the same thing, right? So
Mm-hmm.
disruptors are usually, met with a lot of resistance, a lot of
Mm-hmm.
pushback, actually, and that's I think that's what we saw in the early days when we were starting to create this narrative of that, capital markets need to be running with security tokens and smart contracts and, transparency and programmability. It was like, whoa, whoa, like, what are you doing? It's not broken. What do you need to
Mm-hmm.
fix here? Well, the taxi industry wasn't broken either.
Mm-hmm.
The hotel industry wasn't broken either. We just
Mm-hmm.
wanted to actually make it run, more efficiently. We wanted to reimagine actually an industry like if we were to create it today. And that's very much like what we're doing here. Now, what we've seen since November 4th is the winds have changed, right? So instead of the resistance we're seeing, now we're getting the right pull, right? So there's winds in our sails, and it's pulling us in the right direction. There's clarity on what tokens are, right? There's the collectibles, there's the utility, and then there's the security, right? These are all like what's been defined by the crypto council on the Hill, and that's really actually helping to drive some clarity around what we do, how we operate, and for the industry as a whole. So the regulators are warm to it. I know the regulators in Canada, like two, have already approved the issuance of security tokens on a DLT. Broker dealers are already starting to act in that way. I do know there's more than a dozen broker dealers in the US that have in their filing actually that they are permissioned to issue security tokens on a distributed ledger technology platform. So, we're starting to see, again, the narrative is pushing. Now, it's just going to it'll take time, just much like Uber. It took
Mm-hmm.
time actually in order to, develop the drivers and, the workforce and everything else. But, at some point in time, then you go from minimal growth to explosive growth. So at
Mm-hmm.
what point in time do we get to explosive growth? Well, that still could be, a couple of years, or it could be actually as quick as 18 months.
Yeah. Yeah, no, it seems like there's been some great progress, at least in some parts of digital assets, since the new administration has taken hold. And, stable coins, Bitcoin, institutional interest in tokenization. So, but of course, you need to have a huge framework to be able to trade securities on a new style of, more efficient, hopefully T0 24/7 using
Yeah.
blockchain technology. I feel like that's not something that they can just do overnight, especially since, the way that the stock market is right now, the people that have a hold of that, they like the way that it is, although it is pretty inefficient.
Yeah. Well, I think the inefficiency means there's more cost. The
Mm-hmm.
costs actually go to the actors that are, again, this is a job, right? Like transfer agents are needed in the current framework. They're not needed in the future framework, right? And
Mm-hmm.
so that's what I mean by reimagining, what this capital stack formation looks like and how it operates today and who needs to be where, as part of, having their fingers on something on a keyboard or in a filing cabinet, right? The filing cabinets are gone. maybe the fingers on the keyboard aren't even required anymore because, and I've used this reference before. We've seen actually that movie where the machinery takes over. We're building Skynet here for capital markets, right? The machinery takes over. The tokens are actually a program. Why do we need humans actually like in between in order to like settle a transaction? It's the actors like you and I that are wanting to either from an issuance point of view or from an investor point of view that are acting in good faith with each other and issuing these security tokens and you're making the investment. But once the machinery's set up and it's processing, what more do you need?
Definitely. I'd love to know a little bit more about Polymesh and the layer one. And I know you mentioned at the beginning about the ERC 1400 standard, which was on Ethereum. I'm sure there's probably other advantages besides the fact that Ethereum it can be slow or it can have higher transaction costs. What are the main advantages of having a dedicated layer one blockchain like Polymesh to run all the tokenization through?
Um, the major advantages of having our own layer one. Well, and that is a key differentiator of Polymath from anyone else is that
Mm-hmm.
we do have our own layer one. It was created by us. If we need to make changes to, let's say, the functionality from a regulatory point of view,
Mm-hmm.
we can do that. We
Mm-hmm.
can put that change out. Operationally, I'd say we've always operated the chain and built the chain for regulatory compliance and institutional grade. And all of our node operators are financial services companies, or they report to are up to a regulator. They need to be licensed as a broker dealer, as a bank, as an exchange, in order to operate.
Mm-hmm.
Um, the interesting well and like I said actually it is our competitive advantage and our I'd say our moat now.
Mm-hmm.
um our competitors in this space, I'd say, again, if you're issuing on Ethereum or if you're
Mm-hmm.
issuing on another general purpose chain, well, I'm not saying actually that that's a disadvantage, but it's definitely, I would say not going to be the chain of choice in the future, right?
Mm-hmm.
Public permission actually
Mm-hmm.
is, at least in this environment, I'd say is a requirement. Taking the chain public, actually, as I said, I
Mm-hmm.
think what we've done is now raise the stakes for all layer ones and anybody that's operating in this space of security tokens, unless your layer one chain is public, right? And it's got greater governance now because we get out and we now have to report to, our financial regulator, and actually it's transparent by the way of our financials as well,
Mm-hmm.
right? Now we've got that transparency that I'd say no other chain and no other organization has that is operating in this space.
Mm-hmm.
Um, but yeah, the compliance aspect is key, and really just being able to move fast with the market. So we've got our ear to the market. We're really listening as far as what's required, from a customer point of view, from a regulatory point of view, and we've got the ability to move the needle because of that.
Mm-hmm. Yeah, no, it's good to point out that sometimes permissionless, fully decentralized blockchain where nothing can ever be changed without 99% of people agreeing to something, it can be unfeasible if you have to fit it into the current regulatory framework and make that more efficient of the stock market. It's how can you get everyone to agree? Sometimes if having permission is good, but having the accountability of being a public company, I think sort of balances that out. That it's like, hey, we're able to adapt with the regulators, and we're accountable to the regulators and the investors and the people that are doing the tokenization because everything's on the books.
That's right. And at the end of the day, like it's a system of trust that you build here. So, again, like it takes years to build a trusted network that people can embrace and say, okay, I'm going to use this chain. I'm going to
Mm-hmm.
use this system. I'm going to use this company actually, or partner with this company in order to operate my business and to issue a security token. Um, it takes all of 5 seconds actually to just ruin that trust, right? It's either via
Mm-hmm.
security breach or, like we saw it with another chain out in the UAE as well, where, the value of the utility token that powers that chain completely, I think it dropped by 90%. So, again, like we know, I'd say a majority of our token holders, Polymath holds on a large reserve itself, as part of a public company as well, just to provide that level of
Hmm.
security. We're working to make sure that there are other publicly traded companies that are also holding our utility token on book, just to show that again, this is not a this is not a game here, right? Like we need to increase the level of I guess trust in the network,
Hmm.
with public and private companies actually holding, our token that powers our chain, on their books and balance
Yeah.
sheets.
Yeah, no, that's really nice to know. If other public companies are getting involved, that's much more than other tokens in the space, I can say. And I saw that Polymath is also going through another raise right now, and that makes sense if there's going public, acquisitions, all this stuff. Can you talk about the raise? Potential partners. What's that going to be allocated towards?
Yeah, yeah. So for sure. So we're raising 18.75 million. That represents 20% of a public float that's required in order to go public. Um, and the reason for going public, it's not that we need the funding or the money. We're well capitalized. We've got a long runway. The reason for going public is, to raise awareness of what we're doing, but then also to have another form of currency in order to acquire companies to be part of our story going
Mm-hmm.
forward,
Mm-hmm.
right? So we have not just a growth story of bringing customers on, our capital platform, our issuance platform, and then on chain, but we've got another story that's forming as far as our an M&A an M&A actually activity, right? And that's just to be able to say we're going to compound, our revenue and our, basically the market cap of the company by acquiring select assets that we feel that can add value, not just to the overall organization, but to the chain itself. So how do we get increased TVL on that chain? If there's a TradFi software business that's operating in the capital market stack, that's, provides a key service, I'd say, to this industry. How can we reposition that so it needs the chain in order to power its growth story, right? How does it incorporate actually directly into the chain? It could be fund management software. It could be an AI platform that's producing, peer analysis reports. It could be an exchange, traditional exchange that's out there. And it could be even a cryptocurrency exchange platform as well that's of interest to us. So, I think the market is open. What's of interest is basically anything that fits into that, delivers into the capital markets stack, from crypto to traditional finance platforms.
That's really exciting. I'm looking forward to seeing the raise and going public. And you talked about exchanges. I'm curious on what are the security token exchanges where these companies can get liquidity or people can go to a secondary market once it's tokenized. I feel like that's a small sector that needs to grow a lot as well.
Yeah, there really aren't any right now. And
Yeah.
I think that's the issue, right? Everybody's
Yeah.
in this there's in a primary issuance stage, but
Mm-hmm.
if I think there is okay, so there is INX. INX is now being acquired by Republic. So that is a security token exchange. Um, there were several that were operational, but none of them actually with all that much activity. I
Mm-hmm.
know a few that have already actually folded and gone bankrupt, a few that are up for sale right now, running an ATS actually for security tokens. Like I think you have to build momentum on the primary issuance side, and then you need the ATS, right? And I think there was a lot that went out with all the components and parts at the very beginning.
Mm-hmm.
Um, it is an expensive value proposition. Like what we're building here actually requires compliance officers, regulatory licenses, like, and consistent reporting actually to your regulator on what you're doing. Which then what all that requires capital in order to operate the business. And so, you needed actually a large bank account in order to be able to fund that runway. And unfortunately, there's been some carnage, since 2017. I think now is the right time to be formulating, the right approach. and maybe like again, acquiring actually a traditional exchange, and transforming that into, you
Mm.
know, your own exchange, your security token exchange venue. So that at least you've already got a source of revenue already that you can build upon as you
Yeah.
transform.
Yeah, no, that's a great suggestion at the end there of transforming a traditional exchange. Because one of the reasons that these major companies getting on a major public trading stock trading exchange is the access to so many investors. But if you get on a smaller exchange where there's not as many people know about it, you don't have that network effect. And then take security token exchanges; they're very small, and it's like you don't get that same effect as obviously listing as a traditional public company on a big exchange. How can security token exchanges get over that hump to start building a network effect where more companies can tokenize and get onto exchange and more people actually know about it?
I think it's going to actually happen. Like it's going to be like I think there's going to be a transition that's going to come from two parts of the market. The traditional exchanges that are going to morph into being a security token exchange,
Mm-hmm.
the reverse cryptocurrency exchanges that are going to morph into providing security tokens actually as a product.
Mm-hmm.
I think Kraken's already announced actually
Mm-hmm.
plans,
Yeah.
to operate that. I think Coinbase is working on something as well. Like it is happening, right?
Mm-hmm.
The press releases, the investments actually are underfoot. It's a matter of like who's going to provide it, but it's then really what it comes down to is, well, what's the product that's trading on there? Because there is early evidence. I think you mentioned T0 actually as
Mm-hmm.
T0 as a company had issued a security token and was trading on there. And I believe it was a Ritz-Carlton actually out in Aspen that was highly
Mm-hmm.
traded. They had more volume traded than, the value of of what was tokenized actually in a
Mm-hmm.
day. And those are all just market makers just
Mm-hmm.
moving the
Mm-hmm.
token around. But,
Yeah.
again, like what's the product that's going to be traded, right? Is it going to be a security token tied to a whiskey barrel? Is it going to be commercial real estate? What's it going to be? So it's anybody's best guess, right?
Mm-hmm.
I think it's going to be probably somebody's collectible that that's going to be like some prized possession that everybody wants a piece of.
Mm-hmm. Yeah, no, I'm excited to see how it plays out, and that's some good, prospecting forward. I think a combination of maybe an innovation zone in traditional markets where we start testing out tokenized stocks, and then of course the major crypto exchanges. I saw Kraken made some kind of announcement where people that are there's getting to be more of an overlap of stock traders and crypto traders. It's starting to merge more, and they want it in one place. And Robinhood, I wouldn't doubt them either to start doing something with tokenization. If their recent talk at the Bitcoin conference, they were hinting at that. So I'm excited to
Yep.
see how it plays out. And but you mentioned a few times it really starts with the primary issuance with Polymath right now is actually doing the primary issuance before you get to the market. What do
Mhm.
you see as like the interest since the new administration and even before that, since the Bitcoin ETF launch? We've heard BlackRock talking about RWA and tokenization, other major institutions. How much of a growth in interest over the last year and a half have you seen from companies now opening their eyes and becoming interested in tokenizing with Polymath?
Um, we've seen a lot, and this is like information that we're pushing around actually in our investor deck as well. We've got a very strong pipeline that we're working with organizations that want to tokenize over $4 billion worth of assets actually with Polymath and onto the Polymesh chain. 60% of that is coming out of the real estate sector. So a lot of actually that activity is coming out of real estate, which is again, it's the illiquid market. It's what everybody understands, however. But it's the one that's really going to move the needle when it comes to like, TVL on a chain. Um, so, like I'm excited for the future. I joined this organization like almost 4 years ago. And it's been I'd say an interesting cycle, because I've never seen an industry where there was so much friction and pushback actually from regulators and other actors in this space, and even confusion as well. Like, I've seen other people on podcasts where they say, tokenization of real estate, it's just a REIT, just call it a REIT. I'm like, well, that just tells me you don't understand actually what we're doing here, right? And I think it's that greater clarity of what it is that we're doing here. And it's, when you're tokenizing real estate, you're not creating a REIT, right?
Mm-hmm.
But what has to change to make things easier, I would say, other things also need to be upgraded in other markets. And like the land registry, right?
Mm-hmm.
Dubai's land department is now running on blockchain. What does that signal? That allows the tokenization of real estate to happen directly without having to create a special purpose vehicle. So now, like the hoop that everybody else has to jump over in other markets in order to tokenize an asset has been removed, right? And so that aspect needs to happen in other markets where there's friction from a legal point of view. So basically, really what it means is that really everything should be running on blockchain.
Definitely, definitely, and we'll see how quickly that transition can happen in North America. I'd love to know, the roadmap sort of for the next 12 months into maybe around this time, 2026. What is obviously you mentioned going public and that's huge. But like after that, how do you keep the momentum going and keep the traction growing?
Um, that's interesting, actually. I think it's going to be actually through a land and expand strategy. And we have a land and expand strategy right now where we have launched a Start Me Up program. So if you are a startup, if you want to dip your toe into tokenization, we've got a freemium product. You can sign up for it online, simply clicking, the acceptance to the terms and conditions, create your own tokenization portal. You can issue your security token. You could create your own investor portal. You're done, right? So, and we did this specifically, and it truly is free. We want people to use it. We want people to dip their toe in it. We want people to understand it actually, and I think this is going to help to build the momentum as far as okay, what does this industry have to offer? We want to hear about the creativity. We want to hear about people's frustrations actually as well. And as far as using our products, but we also want to hear and publish the success stories.
Mm-hmm.
Uh, it's not going to be easy actually in order to get there. We understand that because like this, we're not selling socks on the internet, right? Which, you could spin up a marketplace and just start doing that. All you need is a very simple license. Because it's a security, it has to go through an extra speed bump in order to get out over, that hurdle in order to utilize and issue a security token.
Mm-hmm.
So, again, what we really want to do is grab as much market share as we can in order to build that out actually into 2026. So we're going to do that organically, but we're also going to do that inorganically. So, our idea is, look, we'd like to get to, $1 billion company actually
Mm-hmm.
as soon as we can. We're coming out actually on the public markets, and I'd say actually we priced actually our offering attractively for investors to get into,
Mm-hmm.
right? And we priced ourselves out as $100 million enterprise.
Mm-hmm.
Why? Because we actually see upside, and we want to make sure actually our own equity and our own stock actually tracks to where we think it should go.
Yeah.
Um, we have received commentary as far as, well, why aren't you doing it actually on your own chain? Well, we could have actually, but we would be tripping, over some compliance issues ourselves if we did. So that doesn't mean to say that, and our plans are we will list on the Toronto Stock Exchange first. We will cross list on the NASDAQ actually as fast as we can, and that's about 12 months afterwards. We're going to do something creative actually at that point, as far as a token issuance, because we know the path that we need to take now.
Yeah, it's very exciting. I'm looking forward to seeing that listing. What's the best way to follow along with the M&As that you mentioned and the raise in the listing?
I guess follow us actually on our primary website. Polymath will publish all the information there. Follow us on LinkedIn, Polymath. Follow us on Twitter, Polymath. You could follow me on Twitter as well. I'm Tokenized Vince. Our marketing team actually has created an Instagram channel where we're trying to document our go public. So we've got an Instagram channel, Polymath. There's also a Tokenized Vince
Mm-hmm.
Instagram channel as well. So multiple ways to follow us, multiple ways to get information actually from us. The tokenized Vince is just a narrative.
Mm-hmm.
We've created I'd say a viral, our marketing team's created a viral offering with stickers. that we're sending out to people. Actually, just put a sticker on something that it says "Tokenize this" with our logo. So if you want to tokenize a Porsche, if you want to tokenize something, actually record that, send that to us. We'll put that up on our all of our media channels as well. We're really excited about this offering and really what this what this public offering has to do. I'm really excited about the future because, like I said, I'd say six months ago, it was a very different story, and it was a very just different story for a lot of companies actually that was just in the digital asset space and even the Bitcoin space. And it's changed actually since then. And like you said, you and I were both in Vegas. There's a lot of excitement around this space in general.
Definitely. And thank you so much, Vince, for the insights into tokenization, where it's at with companies and the security tokens. How can we actually transition the stock market into being on the blockchain, which I'm excited for one day. I'm sure it will all happen. And I'm excited to see the going public process. I'm going to leave the links to those socials and the other platform that you mentioned in the show notes. And wishing you and the team all the best moving forward on going public and just tokenizing the world. So thank you so much for the time, Vince.
Great. Thank you.